Afternoon, all. This is Veteran Crypto with DeFi Crypto and Airdrops. Promised a gentleman in the blockchain basement chat that I'd do a quick video on AMMs. Those of you that aren't familiar or that might be interested in DeFi, a lot of you might be like I was. You might be kind of scared of losing your bags. Trying to do DeFi because you hear about things like impermanent loss and divergence loss and things like that, and it's this kind of nebulous specter that's going to steal your bags, and it kept me out of DeFi for a long time. And so finally, after doing a bunch of research and finding a couple of the few obscure channels that that actually teach people DeFi. One of them being Crypto Labs Research. I decided to jump in, and I took about $1,000 and put it into DeFi, and it was a wrapped ETH USDC pair, but it was a liquidity pool. But luckily, I did well and made a good amount of money because at the time the markets were pumping. This is a couple of months ago, and so it got me hooked, and I started to dig deeper and learn more. And what I came to find out, sorry, having problem with English, is that the best way to enter DeFi if you're just learning, and this is for you, I believe it was Brian Wild, is lending and AMMs. So we're going to dive into AMMs first. Lending, just briefly, I'll tell you about it. I'll do a separate video on that. But lending is a lot safer than AMMs. It's basically you put your bag there. Really, the only risk of you losing your bag is if you're on a lending, protocol, like Aave, something like that, that isn't well established or well run, and the platform goes down. Then potentially you could lose all your funds. Other than that, though, lending is your safest bet in DeFi. You're going to earn good steady yield, not a lot. You're probably somewhere between 1% and like 20% is probably the best you're going to see. Then there's AMMs. So I'm going to show you AMMs here real quick, and as you can see that I have up is my aerodrome. I use VFAT a lot for a lot of my DeFi, so that's where a lot of my pools and stuff are. But I do have this one AMM on Aerodrome itself, and you can see VAMM tells you exactly what it is, and this one is a USDC Aero pair. So with this, I'm going to give you the pros and the cons. As you can see, I have $2,480 in there. I think last time I took my emissions or my profits or yield out was, I want to say it was like 2 or 3 weeks ago. But since then I've earned 118 Aero. Right now I'm earning 41.25%. About the lowest that I've seen it go is about 38. I think is about the lowest I've seen it go. But and as you can see, there's an equal amount of Aero and USDC. Hey, what up, Crypto Breezy? I'm just making a quick video for Brian Wild. He was in the chat on Blockchain Basement and was asking me to do a quick breakdown of AMMs. So as you can see, I have $1,228 in USDC, and I have 2,400 in Aero, which is dollar wise the same amount. Because right now Aero is about 50 cents, so half that, $1,200. So what an AMM does is, as the value of, in this case, Aero goes up and down, as the price of Aero goes up, it's going to start to DCA me out of Aero. It will start selling Aero off and converting it into USDC. So it keeps an equal 50-50 split of USDC and Aero. So the downside to an AMM is you're not getting the full price appreciation as Aerodrome goes up. Oh yeah, no, I appreciate you, Breezy. you're not going to get the full price appreciation. So, basically, if you hodled, you would have made more money. However, the whole time that this market has been tanking these past couple of months, and anytime the market is moving sideways, you in an AMM, you're earning yield. I'm earning 41%, APY. So, what is that here? I've been doing numbers all morning, so my brain's a little bit fried. I apologize. So 41% divided by 12, I'm earning 3.41% per month. So basically just, per month, and this is compounding, every couple of minutes, this is paying out free arrow. So technically, I could actually compound this daily if I wanted to. I could, if I was making enough, I could pull out the arrow, every day and compound it back in so that, I'm constantly, having a larger and larger balance and making more, off of it. Anyway, back on track. So that is the con of an AMM is you're not getting the full price appreciation. And again, however, with what you're earning in emissions or yield or profit, what you want it to do is you want it to offset that. So as of right now, my emissions is far outpacing potentially what I would have lost. In addition, just like you're not getting full price appreciation on the upside, you're not going to get the same losses on the downside because the same thing is happening. These past couple of months, as Arrow's been tanking and other alts have been tanking, it's DCAing the same to keep that 50-50 split. So as it's going down, it's selling USDC and it's buying Arrow to keep that split. So again, it's mitigating my losses. So I hope this is making sense to you. So it basically, in short, if it goes up, it's mitigating your profits, but as it goes down, it's mitigating your losses. But no matter what the market does, if it trends sideways, if it goes down, if it goes up, you're earning. That's the key. This isn't a sprint. AMMs and lending aren't a sprint. They're a marathon. It's a long-term play. So what you want to do is, and I've been doing it, for months now, and been able to about every 3 months, I'm on pace to double my money. So I started out with about 12 grand, and I still have over $12,000 in my DeFi portfolio that I've been using to earn. So my HODL portfolio is down like 50%. However, I'm still in the green on my DeFi portfolio. So, it shows you the power of, that slow, steady, earning of yield. But I mean, that's pretty much the long and the short of it when it comes to an AMM, pros and cons. But it's super easy to enter a pool. Really, you just need to have an equal amount of Arrow and USDC. And here, I'll show you how to do it real quick. Go to liquidity on Aerodrome. You can go down here if you want and just do AERO. And right there, first one. So you can see excellent volume. $51 million in volume, 41 or 44 million in total value locked. You couldn't ask for, for better stability. TVL, because you don't want to get hit with slippage, which is, it's basically kind of the tax that you would pay to, enter and exit a low, a pool with low TVL, and volume, because that's what's earning you fees. So, if you look here, fees, $154,000 in fees has been paid out to this pool to people. So, like I said, I mean, this is a really nice play. Hey, afternoon, Deadwood. Yeah, no, breezy. Like I said, I'm trying to preach the good word about DeFi, but yeah, I mean, and we're definitely picking up speed. There's a lot of people that are opening their eyes to the power of DeFi, And I know I'm kind of shooting myself in the foot because, ultimately the more people that are providing liquidity, the less the less fees there are for for all of us to earn. So it's definitely an early adoption thing. As large institutions move in and start dumping millions and billions and trillions of dollars into the DeFi market, those of us that are adding thousands of dollars, we're not going to be earning as big of a slice of the pie when it comes to fees. Oh, you don't have used? You mean USDT or USDC? Let's see. I've gotten 5 Arrow in a month off $150. Yeah. No, I mean, yeah, I mean, $150. I mean, that's not a ton of money, but you figure what, $150, $5, you're looking at 5%. Yeah, you're looking at just under 5%, return on investment in a month. That's not bad, dude. It's add a zero to that. If you had $1,500 in there, that'd be an extra $50 a month. That's not bad, and you still have all your Arrow. And when the market starts pumping, that 5 Arrow is going to multiply. So if we go back up to where it's $2.50 and it 5x's from where it's at currently, $2.50, 5 Arrow, you're looking at, you made what? Man, why is my brain not working? $2.50, you're looking at $10, $12.50. You're looking at you're looking at $12.50 off of $150. It doesn't sound like a lot, but again, it's off $150. Oh no, Nasty's in here. He's probably gonna bring his stepmom. She's always getting stuck in dryers. Oh, that lady. She'll never learn. So, I mean, do you guys have any questions? I mean, before I end this out, I just wanted to do a quick AMM, but yeah, as far as deposit, once you find the AMM you want, you hit deposit and you come in here, and then again, my wallet's connected, so you can see the Arrow, the dust that I just have in my wallet. This 2,800 is this month. What I've earned this month so far in the different liquidity pools I'm in. So, and a couple of weeks last month too. I think this is about a month's worth of earnings off of my Aerodrome deposits. So this is just dust, and I'm again just waiting for Arrow to pump a bit before I move it into some other assets to start some new liquidity pools. But again, you just need to have an equal amount of USDC and Arrow, and you just basically select how much you want to deposit. So if I want to deposit my 2853 of Arrow, I need $1,465. You come over to here, you click allow Arrow, allow USDC, and then it will pop up deposit. You hit deposit, bing, bang, boom, you're done. So yeah, I mean, it's really that simple. Let's see. Thankfully rolled out from under my sister. Nice. Nasty mofo likes him huge. Oh, yep. His stepmom does. So that's really it. I mean, it's don't want to make it overly complicated. It's AMMs, and that's why I'm always telling people lending and AMMs. There's not a whole lot of risk involved with with those two. It's when you start getting into liquidity pools, and even with blue chip. You know what? Here, real quick, while I'm on here, even with blue chip liquidity pools. Let's see. Let's do this. We'll actually go over to Uniswap real quick. Uniswap's really starting to grow on me, and the way ETH fees have kind of been somewhat reasonable lately. I'm not as not as timid when it comes to using Uniswap. I've been a huge, those of you that watch, I've been a huge base chain, uh, kind of maxi for a while, just because the ease of use with the Coinbase wallet and the low fees that the base chain offers, and uh, great dexes. You got Morpho, you got Alien Base, you got Aerodrome. So yeah, you can come on here and yeah, like right here, you got a wrapped Bitcoin USDC pair. You can make 17% on your Bitcoin. And I mean, where there's not too many places you're going to find decent yields on Bitcoin. But here's one of them. Let's see. I guess I could show you Plume. Let me see what my Plume is doing right now. I know the Deadwood is a brother. Yeah, look at that. Freaking my Plume is making 191% right now off of 572 bucks. I initially deposited 600. I think it was like 611. Um, yeah, I initially deposited about 611. I've earned about $5, worth of Plume. So actually, I got about 17 Plume and about $2.50 in USDC. But again, that's it. There's no range. This is basically an AMM. You can see down here, minimum price 0, max price infinity. So it doesn't matter what the price does. It doesn't never falls out of range. It's just 24/7 earning me, a yield. And right now, that yield is almost 200%. Sometimes it will drop down if there's not a whole lot of volume. It will drop down in the single digits. But and yeah, Deadwood. I mean, it's at 12 and a half cents. But here, I'll pull up the chart. Freaking Plume. We did a deep dive update on Plume last night on the show, and with Jeff over at the blockchain report, and some of the new partnerships that that they got with Pinlink, and just super bullish on Plume, and that's why I'm so excited about that pool. Is I'm just earning free Plume, at these discounted prices. But you look, and yeah, there's been a nice dip, but you look at this, freaking just been ranging since it launched. It had a nice initial pump to 19 cents, but since then it's been pretty much ranging between 17 cents and 9 cents was the lowest it went. But really, the support level is at about 12 cents. You can see it's tested it a couple of times here. And the resistance is at about 16 cents, 15, 16 cents. So, but again, since launch, just this beautiful sideways action. I mean, you could even do a range on Uniswap. So if you wanted to, like, say you wanted to add liquidity to this, or you wanted to open up a new one, you can actually pick a range and get better than the 200% that I'm earning with no range. So that's always an option if you want to get a little froggier. Let's see what we got here. With USDC, I have ETH on Plume on Ondo. Yeah, no, there's ETH ETH Plume pairs as well. Crypto Breezy, I talked to my brother-in-law to do this, and I'm sending this video to you. All right, cool. I got in at 10 cents. No, absolutely, dude. Awesome entry, and a great way to lower your average entry is earning free. Earning free dry powder. Every while you're sleeping, you're earning. While you're working, you're earning. When you're out working on the property, you're earning. It's a great feeling. It's like having a second job that you don't have to do any work. Really all you got to do is, put some liquidity in there and forget about it. Just don't shoot yourself in the foot and be rebalancing all the time. Yeah, 16 has been heavy resistance, but when this market takes off, and you got to realize Plume mainnet hasn't gone live yet. The testnet and the devnet have this week, but the mainnet isn't supposed to go live until later this month. So that might be the catalyst that really allows Plume to take off. And with almost the daily partnerships that Plume has, where it's coming out with Pinlink and Ondo and like over 180 partnerships that so far. Let's actually look that up real quick. So if you're not following them, this is the official page here. Plume Network, at Plume Network, 1.1 million followers. So it's huge, huge. Freaking a huge amount of followers. And if you scroll down, you got Plume partnered with Walrus. You got a Holly meetup. You got Plume and what else we got? The open delegation. Yeah, RE Colors. Plume, they were a sponsor at the RWA summit, in Denver. What else? What else? At the White House. Yeah, I mean, they're rubbing elbows with all the right places and all the right people. NextAid, that's another partner. RWA 2.0 looks like in where was that? New York, maybe. Not recognizing the skyline. Let's see, but yeah, let's actually go to their website real quick. I want to show you all of the. Yeah, here we go. All right, so yeah, you can see they're partnered with Nest, Ondo, Credible, Superstate, Centrifuge, Mercado, Mercado Bitcoin, Paxos, Layer Zero, Nucleus, Anchorage Digital, the Explorer ecosystem, and like I said, there's over 180 plus partners. So I mean, I could sit here for quite a while and name them off, but I don't think it's necessary. DPIN, it was one that was just announced. Like, again, we did a video last night, so if you want to check that out, please like and share that one. I think it will get a lot of people. And Jeff, I have to give credit to Jeff over at the Blockchain Report. He's the one that clued me in on Plume, before the launch. So I was, watching for it, caught it on the launch, and but yeah, the more people that we can help out, and get the good word out there, about DeFi and about a lot of these, projects, early, where people can get in early on these projects. I really want everyone to be successful at this. And I hope you're more successful than me. And if you learn some stuff, please share it with the group. Here pretty soon, me and Jeff's brother and Jeff, we're working on a DeFi platform where, for free, we're going to offer a, basically a DeFi aggregator, but it's going to have an integrated portfolio tracker to give you live analytics on, how each of your pools are doing, relative to if you hodled and, things like that. And then also overall, how much profit have you made, the past 7 days, 24 hours, 1 month, year, all that stuff, projections of, if you keep, tracking like this is, potentially what you could make, those sorts of things. And then all the research tools that I use. So, links to the different sites, we're going to embed, some of the charts and things like that on the actual site. So it's a one-stop shop to where, you can pull up the charts and find, like if you want to, do a liquidity pool and you want to pick the ranges, you can pull up the, the chart and like we just did and look at the support and resistance levels and make that your range, because if you can look back, the longer the time frame, the better. If you're doing it on the daily, picking daily candles, and you can go back, a couple of months and, you can see a range, because it's been ranging sideways like Plume. That tells you, where to set your ranges. And then if it goes out of range, then, you rebalance. But yeah, if you can be in range for, the longer, the better. because you're going to earn yield without having to pay fees to rebalance or exit, re-enter, and those sorts of things. All right, so what do we got? It seems to be a corporate rail with Ondo retail. Yeah, absolutely, Deadwood. I mean, it's definitely seems to be positioning itself. Plume is positioning itself to be a part of the institutional play when it comes to DeFi. I'm excited that DeFi platform vet, really good shit. Hey, I appreciate it, man. Right now, we got Jeff's brother Rob. He's doing the back end integrations for the Wallet Connect and making really good progress, I might add. The Wallet Connect and integrating it with Uniswap and things like that to where to make sure that we can get the real time analytics, the data mapping and stuff like that. Oh, damn. Been going on for 25 minutes. Yeah, I better end this thing. Mark, Veteran Crypto, I use AMMs, but I see my locked value fluctuate in the LP. Is that lost if I exit the LP? So it's. I'll break it down, Mr. Mark. I did this. I explained it earlier in the video, but I'll do it again real quick. So when you're in the AMM, let me bring it back up because I'm kind of a visual learner myself. Let's see. What's the best way to do this? Let's go to Uniswap. Actually, you know what? Let's go to Metrics Finance. He has a really nice platform here, DeFi aggregator. Track. Give it 1 second. Actually, let's do this. All right, so let's look at, see if we can find an AMM. All right, so once this pops up, all right, so this one here is a liquidity pool. And as you can see, right now, these green lines are the upper limit and the lower limit of the liquidity pool. So over here, you can actually adjust it. You see how, when I do the plus and minus, that bottom line is moving, and here I'm moving the top line. So in this case, I would move this up and see where this is acting as resistance. That's where I would want that top part of the range, and I'll get to AMMs here in a second. And then this one here, I would move it up to where it's kind of where this support has been, and maybe that would be my range that I would set for this. And and based on this, it would give me what my my APR would be. So with an AMM, you don't have this range. So no matter what the price does, you're always earning. However, it's kind of the same thing as with a ranged liquidity pool. So this is the difference between a liquidity pool and an AMM. A liquidity pool has a range. An AMM has no range. It's 0 to infinity. However, it does the same thing. As the price fluctuates, like you have USDC over here, and you have, we'll say, Arrow over here. As the price of Arrow fluctuates, as the price of Arrow goes up, it's going to start DCAing you out of Arrow, and it's going to sell it off into USDC so that it maintains an equal amount, dollar-wise, of USDC and Arrow. It's right now, because the price of Arrow is dropping, or it has been dropping, it's been DCAing you out of USDC and buying Arrow. That's why you're seeing the value of the pool lower, just like if you were hodling it. However, because it's DCAing you out, you're not losing as much money in these downturns. So if you were hodling, you would have lost a lot more money, or you would have lost more money. I won't say a lot. You would have lost more money hodling than being in an AMM. Plus, you're earning fees the whole time, so you're further mitigating those losses. You're preventing those losses. If that makes sense. Oh, you can't see what I was doing. So yeah, that's what I was showing you is those ranges. But the same thing happens on the way up. You're not going to see versus hodling. You're not going to see the same amount of returns as the price of arrow pumps. It's going to be DCAing you, out of arrow and putting it into USDC again to keep an equal amount of USDC and arrow. So you're not going to get the full price appreciation. You will get some. However, again, the whole time the market was going down and sideways, and when it's going up, you're going to be earning in the arrow AMM I'm in 40% APR, no matter what the market does. So you're just constantly earning, and you're constantly earning arrow. So as that price goes up, then that arrow you earned is going up as well. So, that's what you need to keep in mind. So there's really no reason to exit an AMM. There's no ranges, nothing like that, unless you're going to sell. But, why would you sell at these levels? Keep it in the AMM. When the price goes up, that value, the value of the pool that you're in will go up. So, again, I'll show you mine. And we'll cut this stream because I don't want to belabor the point. Let's connect. Go to my dashboard. So here's my AMM. So when I first entered this, I'm wanting to say that what I could go look, but you figure it's at 50 cents now. It was about $2, when I entered this. So I had like 10 grand. This was 10 grand that I stuck in here, and I probably a little bit less than that, probably like 8. But and it's only worth 2,500 now. But I've earned probably, I would say, I've at least doubled my money. No, not doubled my money. Not exclusively from this pool. I'd say I've probably earned about 1,000, maybe 1,500 arrow off of this pool by itself. And so when it goes back up, 1,500 arrow, if it goes back up to $2, that's 3 grand that I've earned off of 8 or 10 grand in the past 3-4 months. So it's not as much as you can make on a liquidity pool or buying a meme coin, but it's a hell of a lot safer. You're not gonna lose your arrow. Really, the only way that you're gonna lose your arrow, doing this is if Aerodrome, the whole platform goes kaput, goes out of business. And I honestly don't see that happening with Aerodrome. And I've put my money where my mouth is. My locks. Here's my locks that I have, and I've locked. You can see I've locked them for 4 years. I have 6,164 arrow in this lock, and just over 3,000. So I have 9,100, 9,200 arrow locked up for 4 years. I'm definitely I'm definitely bullish on arrow. So let me get your guys' questions, and we'll cut this off. Yeah, no. If you can be patient and unemotional and stoic in these rough markets, that's what sets apart the people that are going to profit and the people that are going to lose out. They're going to be the exit liquidity later on, because the people that are selling, they're people like me and you are buying. I have bags to sell, keeping my AMM locked, and then keep my locked in a relay for the weekly. Yeah, no, definitely use that relay if you're going to do a long-term lock like I'm doing. Anything that's a couple of months or a couple of years, just put it in a relay. This fluctuates. It's at 51, 52% now. When I first got in, it was in the 60s, but again, it's 60% APR that compounds weekly. I started out with about 5,100 here and about 2,500 here. So total, I've earned about a little over 1,000 free arrow in the past about 2-3 months, and here about 500. So I've earned about 1,500 free arrow, 15, 1600 free arrow. And it constantly adds to the balance. And as that balance grows, I earn even more. So it's about a little over 100 arrow, each week that I'm making. It automatically does it, Mr. Mark. I don't have to restake the arrow from the relay. It shows up over here, but you can see I started with 5100, and it's showing that I have 6164. So it automatically compounds. It's auto compounding. That's the beautiful thing. It's a weekly auto compounding savings account that is earning me at currently 52% APR. Where are you going to find a weekly compounding? And if you don't understand the power of compounding interest, do some research. It is fucking powerful. The more often you can compound, the better. But weekly is a beautiful thing. It's it's putting your earning on steroids. I might only be earning 52%, but because it's auto compounding over the next 4 years, I've already done the math, and arrow at even $10, next bull run, I'm going to have a couple $1,000,000 off a $5,000 investment. I initially put in about $5,000, and if arrow is $10 here in 4 years, I'll probably have about $3 or $4 million just from this lock. So that shows you the power of auto compounding over a long period of time. So I'll end it with that. Like I said, I don't want to talk you guys' ear off. This was meant for Brian Wild. Just kind of giving him my pros and cons of a AMM. But as always, if any of you have any questions, please reach out to me. I'll do a quick video like this to help you out any way I can. And please like and share. Spread the gospel of DeFi. And until then, Veteran Crypto out.